This is Optimal Finance Daily, episode 1379, How to Overcome Your Fear of Investing in the Stock Market by Phil Town of Rule1Investing.com. And I'm your host and personal finance enthusiast, Diana Merriam. This is the show where I narrate posts from thought leaders in personal finance every single day of the year in 10 minutes or less. If you didn't know, we have a weekly newsletter sharing tips, tricks, advice, inspirational quotes, and more. It's a great way to show your support and totally free. Just enter your email address at oldpodcast.com to join. But for now, let's get to today's post as we optimize your life. How to Overcome Your Fear of Investing in the Stock Market by Phil Town of Rule1Investing.com. If you're new to the stock market and have a fear of investing, don't worry because you are definitely not alone. Most investing beginners associate investing in the stock market with intense feelings of fear, stress, and anxiety. While you may have reservations about getting started, that shouldn't stop you from investing in the stock market altogether. In fact, the longer you wait to start investing, the more opportunity you miss out on to grow your wealth and achieve financial freedom for yourself. So let's cover some of the most popular excuses for not investing and how you can overcome the financial fears behind them. Where does investing fear come from? Plain and simple, fear of investing comes from not knowing what you're doing. Investing in anything, especially the stock market, when you don't have a concrete game plan can be scary. It's a serious journey that shapes your life and can lead you to live a life free from financial burden. For example, if you don't have a solid amount of money to retire on 20 or 30 years from now, the government may not have the funds available to support your lifestyle, which is scary. That's why it's becoming increasingly more important to learn how to handle your own money. In reality, the only fear of investing you should have is the fear of what you will miss out on if you don't invest. As long as you know what you're doing, there's nothing to be afraid of. Don't let fear get in the way of you taking advantage of the huge opportunities the market offers for wealth and financial security. Top 5 investing fears and how to overcome them. Now that you understand the beneficial impact investing can have on your life, let's dive a little deep into some of the most popular excuses people give when they're afraid of investing in the stock market. Do any of them sound familiar? If so, you're in luck. We'll look at why these fears are myths and how you can change your fears into productive action. Investing fear number 1, I'll lose all my money in the stock market. People who say this believe that the market is risky and that no one ever beats the market. The truth is that plenty of people do beat the market. Warren Buffett has been crushing the market for 60 years. Investing in companies is not risky if you know what you're doing. That means learning the steps you need to follow to find great companies that are worth investing in, and then following those same steps again and again to keep on finding more great investment possibilities. It's a formula that keeps on paying off. Investing fear number 2, I'll never be able to retire. Do you ever worry that you'll have to keep on working for the rest of your life? When people believe this, it's because they don't really understand the power of compound interest. Albert Einstein, who understood a lot of things, called compound interest the 8th wonder of the world. The math behind compound interest may be complicated, but the results are clear and awesome. Here's an example. Say you invest $10,000 at an interest rate of 6% per year. At the end of the 12th year, your money will have doubled. Then, if you keep on earning at the same interest rate, it will continue to double every 12 years. So by year 24, it will have doubled and doubled again. If you're investing for 30 years, then your $10,000 will grow into $60,000. If your rate of return is higher than 6%, then your money will grow even faster. This is where the results get really spectacular. At a 15% rate of return, your money will double every 5 years, and in 30 years, you will end up with $640,000. All of it from your original $10,000 investment. What this means is that if you learn to invest wisely, buying great companies at great prices, and you give yourself enough time, then the power of compound interest will create a larger retirement nest egg than you might expect. Investing fear number 3, the stock market's going to crash. Are you afraid that you'll lose all your money in a stock market crash? Rule number 1 investors know that crashes are actually opportunities. The key to investing in the market without fear is to learn to recognize those opportunities when they arise. Then use that knowledge during a crash to find wonderful companies that are on sale at bargain basement prices. When the market goes down, it will come back up. When you buy great companies during a crash, just hang tight and you will reap the reward when the market goes up again. Investing fear number 4, I'll never get out of debt. If you're deeply in debt, you may be afraid, like many people are, that you'll never be able to dig your way out of it. But that's not true. You can manage your debt and pay it off. It just takes time and self-discipline. Start by making a promise to yourself that you will pay it off. Then make a plan. Every time you get a paycheck, make a payment on your debt before you spend the money on anything else. Investing fear number 5, a catastrophic event will bankrupt me. Do you worry that a health emergency will force you to go into bankruptcy? You don't need to worry if you're prepared. Get great health insurance, and that will help ease your mind. If you're really worried, you can also buy supplemental insurance. And it's always wise to have an emergency fund set up so that you're financially prepared to deal with whatever may come up in your life. 3 simple steps to overcome any fear in investing. Still not convinced investing is for you? If you still have some lingering fears about starting your investment journey, the same basic principles apply. 1, knowledge. Know what you're doing. 2, preparation. Be prepared for emergencies. 3, action. Act on your knowledge when the time is right. Learning how to invest and understanding what you're investing in will give you the confidence that you need over time to start putting your money into the stock market. Use your rational mind to work through and dispel your fears. It's never good for an investor to be afraid. Fear causes you to make mistakes and to miss great opportunities. Knowledge, preparation, and action will put you on the right path to security and wealth. You just listened to the post titled, How to Overcome Your Fear of Investing in the Stock Market by Phil Town of Rule1Investing.com. I found it refreshing to read this article and see how far I've come in my own fears about investing in the stock market. A few things stood out to me here. Firstly, Phil mentioned that many people worry about beating the market. But I wanted to point out that you don't have to beat the market to win with investing. You can reach your financial goals by mimicking the market, which has always risen over longer periods of time despite market corrections. Passive index fund investing is my favorite way to do this because it has been proven to be more effective than active investing. What you really need to beat is inflation and the measly return you would get by keeping your cash beyond an emergency fund in a savings account. People who actually lose all their money in the stock market are not index fund investors. They're picking individual stocks and even worse, might be borrowing on margin to invest. I also think you can get over your fear of losing money by not looking at every dip in the market. These should be expected. And remember, you're not losing any money unless you sell. Ironically, many people do sell during a market correction because they are afraid of losing money. I think a more helpful way of looking at this is to focus on the long term and look how much your money has grown versus if you would have kept it in cash. Also, please don't look at Warren Buffett as your example of how it's possible to beat the market. He is a brilliant investor and we can all learn a ton from him. But the large majority of us need a very simple portfolio that mimics the market to meet our individual financial goals. If you're going to compare yourself to anyone, it should be to your peers who are more comfortable in investing than you are. I suspect that many of them are or will be able to retire because they did this simple act of investing early and often, utilizing tax-advantaged retirement vehicles, and choosing investments with low fees and ideally no commissions. And at the risk of sounding like a broken record, please read The Simple Path to Wealth by J.L. Collins if you're intimidated by investing. I cannot overstate how much this book helped me. And that will do it for today. Have a great day and start to your weekend. Thank you for listening, and I'll be back here reading to you tomorrow, where your optimal life awaits.